Welcome to notepayments.com. My name is Justin Patterson, and in this short presentation, I'm going to share with you how in the last decade I've been able to generate a safe and passive return on investment without the risk from unpredictable market conditions or the headaches from traditional rental property, using a little known yet very common strategy. And that strategy is what I call real estate notes or mortgage notes. Now, payments from these notes offer a fixed monthly income stream and can be the perfect fit for retirees living off of their nest egg or high income earners looking to diversify, and one of my favorites, landlords that are tired of managing rental property. So here's our agenda for the next few minutes. I want to share how I personally discovered real estate notes, what notes are and how they're created, the difference between owning rental property versus owning a mortgage note, how you may can benefit from notes, and then finally some helpful resources. So before I begin, I do need to add a disclaimer. Always check with your advisors. This presentation is designed for informational purposes only, and it's not an offer to sell securities or investment products. It's provided with the understanding that we are not engaged in rendering legal, accounting, or investing advice. If legal, tax, and investment advice or other expert assistance are required, the services of a competent professional should be sought. Okay. I began real estate investing in 2011 after reading several books like the one shown, Dave Ramsey, Total Money Makeover, Rich Dad, Poor Dad, Life and Air, many others. And basically the thought of working for myself and being a real estate investor, it really excited me. So I jumped straight in, and eventually from my real estate investments, I was able to quit my job and go full time in 2013. And since that time, I've just done hundreds of real estate transactions.
Hi, I'm Justin Patterson, professional real estate.
We'll just skip that video. Several years later, after I started, I built a real estate investing business called Upward House Buyers, and we became very well known in my local market of Little Rock, Arkansas. My wife and I even ran some TV ads on some local networks, and over that period of time, I did many types of investment strategies like what you see here on HGTV, fixing and flipping, rental properties, land, just all kinds of different things. And through the years, I networked with investors through conferences and masterminds. I traveled. I met many other investors locally and in other markets throughout the country. I learned a ton about real estate investing, and thankfully, I eventually discovered this wonderful market and strategy called real estate notes. And from my personal experience of doing investing and then hearing experiences of many other investors, I just came to the conclusion that investing in and owning mortgage note payments is superior to all other strategies, mainly because it benefits the benefits that it offers, right? As well as how it perfectly fits like my desired lifestyle. So this has been my focus for years now, focusing on and specializing in real estate note investing. So today I still manufacture, buy, and sell mortgage notes for a living. Mortgage notes create tremendous opportunity for the following reasons. The rate of return is predictable because it's fixed. They produce monthly income. Because monthly payments are received, there's an immediate return on principal. They are passive in nature. And finally, perhaps one of the biggest benefits about notes is that they're backed up by real estate. So there's valuable collateral protecting the asset. So what is a note? Well, our US dollar is actually a note. The checks that you write are notes. If you get a car loan, you're signing a note. And when buying a house with a bank loan, you sign a note payable to the bank. In this example, Jane Doe is the borrower and signs a note, and within that note holds the terms of the agreement. There's the principal balance, which is the amount of the loan, the interest rate that the borrower is going to pay, the monthly payment, and the term, which is how long the borrower has to pay the loan off in full. And then, of course, the note is signed. Now, I personally work within the seller financing space, which is how I'm able to invest in notes. A seller finance transaction is created in the same way a traditional bank mortgage is, where John Doe, the seller, agrees to sell their home to Jane Doe, the buyer. At closing, John Doe transfers the deed of the home to Jane Doe. In a traditional transaction, Jane Doe would borrow the money from the bank and give them a mortgage note to own as her lender. In a seller financing transaction, the seller just simply steps in and also becomes the bank, essentially loaning the money to Jane Doe, the buyer. And this happens every single day in America. In fact, there's an entire market of seller financing notes. How big is this market? Well, approximately $28 billion worth was lent in 2023, and around $129 billion in loans were created in the last 5 years through seller financing transactions. So let's look at an example a little further. In our previous scenario, John Doe has their home for sale and agrees to sell it to Jane for $200,000. Now, Jane has a down payment of 20%, which is $40,000, leaving an unpaid balance due of $160,000. For one of several possible reasons, Jane cannot get approved through a traditional bank. So John decides to offer seller financing and instead becomes her lender. The property is sold, and John receives a promissory note and becomes a new note holder. John receives 9.75% in interest with monthly payments of $1,374.65 for a term of 360 months or until paid in full. So John is the bank. Why be the bank? When we continue to look at this example, the interest rate on the note was 9.75% annually. So this interest rate would produce $334,874 in interest over the life of that loan. $160,000 was provided, but the total amount in payments scheduled for the loan equated to $494,874. So in other words, $160,000 was invested or lent, and $494,874 was returned. Now, let's move on. Here's one of my favorite topics. Let's look at what being a real estate landlord looks like versus being a real estate lien lord. So we're going to look at real estate versus real estate notes. When you own a property, you own sticks and bricks. When you own a note, you own the paper because you're the bank. Now, a property owner has a deed. A note holder has a note. And then combined with that note is a security instrument, which could be either a mortgage or a deed of trust, which is why they're often called mortgage notes. Landlords are paid by tenants. Note holders are paid by owners. Landlords receive rental income, where note holders receive interest income. Landlords use property managers. Note holders use loan servicing companies. So by the way, loan servicing companies handle all the paperwork, payments, and escrows of the loan, so you don't have to. When owning property as a landlord, you pay the property taxes. A note holder doesn't pay the taxes because the owner does. The landlord also pays insurance. When owning a note, the owner of the property pays the insurance. And finally, this is a big one, the property owner, in this case landlord, has to pay for maintenance and repairs. As a note holder, you don't pay that. The owner pays their own property maintenance. Let's dig a little deeper and let's look at some numbers when comparing these two strategies. Let's say the property generates $2,000 in monthly income. Well, this also means when selling the property with seller financing, the note payment would also be the same $2,000 per month. A rental property has a property manager expense of 10%, which is $200. A note payable doesn't have this expense. The note servicing, though, costs $40 per month. Now, using national averages, a rental property has the following expenses. This particular scenario would be $200 in property taxes, $100 in insurance, $200 in maintenance reserves, so typically 10% is held back in rents. And then let's not forget the loss of rents when a tenant moves out. So 5% is used, which this would be $100 in this case. So when comparing the two strategies on the same property, the net monthly income as a rental would be around $1,200. In comparison to creating a note with it, it would be around $1,960. This is a $760 per month difference, or around $9,120 annually. So even if the note was structured where the monthly payment was slightly lower than the market rent would be on the property, you can easily see how using the property to create a note payable would create a higher monthly income stream than it would be if the property was a rental. So let's summarize. To summarize, let's go over the benefits again of real estate notes, and then specifically how they make and benefit you for your current situation. For real estate investors like myself who's active in the business, we don't have to rely on banks to close on a transaction. So real estate notes allow investors to close more deals, both on buying and the selling side. Now, obviously, it definitely benefits buyers because they can buy property instead of just being a renter. And then obviously, it helps investors sell property with owner financing. But question, what if you want to stay as passive as possible and then just use notes as an investing strategy? Well, notes allow you to do that. They allow you to earn interest income like a bank does. You can receive cash flow without all the headaches of landlording. And then also, if you own a note, they're liquid. There's a market out there. So you can sell it for cash if you wanted or needed to. So, by the way, I buy notes too. And I'll pay a referral fee for any notes that I can purchase. So, okay, well, that's it. We've made it. That's the end of the little presentation here. Now, I'd like to offer you some resources. I do have a very short book. It's designed to help answer some commonly asked questions about mortgage notes. I can send you one if you like. I'm not a writer, but it does have some good information. And so here's my phone number. Just feel free to give me a call. We can discuss further. If you want more information emailed to you, then simply fill out the form on this page with your name and your email address, and then you'll immediately get something from me in your inbox. So there you go. You can call me, request information be sent to your email, or do both. And that's it. So thank you for watching, and God bless.